Yeah, Friday. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday. We're going to do today what we do each and every day, identifying potential breakouts and reversals from an educational perspective. Now, normally I know that we do a live daily market commentary every day at 7 a.m. Central, but we're doing a little bit different today. Pre-recorded version. I am teaching a live class in beautiful Atlanta, Georgia, so a nice chance for me to be in front of human beings again, and looking forward to that. But before we do, we're going to do our DMC. So let's go ahead and get rolling. If you're new to the channel, make sure that you click the subscribe button, hit the notification bell. If you're a regular viewer, please hit the thumbs up icon and leave a comment down below. Comment of the day. What was this week like for you in your trading? As we had a very sideways price action in our overall equities markets, what did this week look like for you? I'd love to hear that in the comment section down below. Everybody, please leave the comment. All right, let's go ahead and go with the ES. So in our ES position, we spoke yesterday about the potential for a breakout either above 38.24, below 37.75. Now that breakout would require the necessary basing in order to do that. We did get the breakout, but we got it last night around 10 p.m., 11 p.m. Central Time, which is not the time of the day that we really look for these opportunities. I will tell you, I was not actively up looking for that reversal point. But I will say that where we're sitting right now is turning into what could be a move down, and a move down on a candle-to-candle relationship would be really the best entry. And so I know it's very early in the morning, 4:48 Central Time. By the time we get this posted, it'll probably be a little after 5:30 Central, 5:15 or so. If I get it up as early as I can, but look for a candle-to-candle opportunity below this pivot reversal candle. Now, if that candle doesn't come into play, while I normally would say that we are only going to take positions in we don't short in a big picture uptrend. We're not really in a big picture uptrend. We're in a big picture sideways trend. And we know the rules tell us to don't tug on Superman's cape, don't spit into the wind, and don't short the all-time high. We are shorting a bit below the all-time high by looking at this level up here. So I'm okay with this level up here if you want to give this a go. If we do any basing in front of it, you certainly would want to make it a confirmation short. But just based on what we've done over the last couple of days, I think that, and the fact that we've been very sideways, this might still work for a decent short. Now, what I would say is I don't know if we're going to make it there today or not, and I would not necessarily want to hold anything over the weekend. Looking at the Nasdaq, very similar picture. As the market popped up there yesterday without truly giving us that that necessary basing for that third touch. Remember, for that basing, we want to see 2 or 3 candles, narrow range right in front immediately before the level. And if you did take it, then you really your basing wasn't really present going up into that region, which is why it was just a poke above the level. Now that price has fallen from that area. I'm still going to leave that line there because I think it's still a valid area for a potential breakout if price does come back up to that zone. But your reversal on here, which is similar to the S&P version, would be this area right here. Now, the thing about this area is because we had this long wick here, this drop base price rallied up, then we have a drop base drop right in there. That's why this would become a potential area. Now, yesterday, the Russell was a little bit closer, and so you may or may not have taken this breakout above this region here. When the Russell popped through that region, wound up running about 40 points off of that move. And the Russell is still our strongest market. So it's the one that is still in the clearest uptrend. The uptrend is still very clean in the Russell, so certainly no shorting above this level. And while the Russell does also have a lot of the same areas, I don't think that the Russell makes the most sense to be shorting the market. But as far as demand goes, I don't have any super clean areas of demand. So if you want to be a bit more aggressive in the Russell, you could look for a long somewhere above one of these regions up here, and getting long above that kind of 2147 area. Moving over to take a look at some of our energies and metal markets, and I'm not going to talk about all of them today. We will just cover a couple of them. Crude oil. Crude oil, yesterday we talked about a confirmation short right above here. We didn't get the confirmation short in play. And so, we also had a, below here 52.50 if we got the basing. Well, we didn't get any of that, right? None of that came to fruition. The basing didn't happen before the breakout, and then the confirmation short didn't happen, and then the market wound up rallying up. Now we did get our, we switched contracts here to the H21 contract. So looking at a potential reversal point on here, I would look a bit higher as your best reversal point, although not a great time of the day on these levels. Still valid, just not the best time of day. Actually, you know what? I'm going to remove that. I don't like it. The time of day is actually enough to keep me away from utilizing it. 4-hour trend is still up, but definitely we see that we've put in two of the same swing highs on those positions, and we got two of the same swing highs. We need to account for that and be aware of that. Our demand area down here is probably the next best level. So really not a lot that I think I want to do today. I think you're probably better off just waiting for the weekend in these positions. I think that is probably going to make a lot more sense. Wait for the Sunday open and see what happens. I mean, if you really want to try something, you've got a couple of areas of demand down below that might be worth pursuing. On the 15-minute chart, you got the area down here, 1526 by 15 or 1524 by 1530, 5239 would be probably a decent little reversal point. But looking at that on the 1 hour, it's a retest of this area back here, which is where we actually caught that long earlier in the week. So I don't know that that's a super fresh level either. So that's why not a whole lot to add to it. Gold. Very similar in gold, as we are just kind of moving along sideways in here. We'd need to get outside of this 1864 or 1826 range before I find a real true opportunity. So we're kind of just hovering in between, nothing there to cover. Nat gas as well, not a whole lot happening. We've been putting in some selling pressure. If you notice, all these swings have some higher wicks. And so when I see something that has all those wicks, that tells me that there's a lot of selling pressure that continues to come in to drive that price a bit lower. We did have inventory numbers yesterday, which was these two big candles here. But they don't typically move the market all that much on the storage day, but it is worth considering. So you could theoretically go candle to candle off of one of these levels, looking for a reversal off of one of those zones. All right, let's take a look at our, not a whole lot to cover in the agricultural futures. We did have a bean oil short yesterday. The price went through that supply level as it rallied up really strong, as it had been really kind of coming down. But I don't have a whole lot in the agricultural futures to cover for today. Bonds, I will talk a little bit about, though. We are sitting on the 10-year note at showing us a little bit of resistance up here, and where price can bust through that area of resistance, but it's aiming for that supply up above. When I look at the 4-hour, our 4-hour trend is still technically down, but I guess actually you would say that it was up. We've got higher swing high and higher swing low now officially. But it's very sideways, right? And it's making me think about it. And so when I have to think about it, it's not as clean. Now, I will say that the 30-year on the ZB was a little bit better, and we talked about this one yesterday as a potential breakdown below this area here, but we needed the basing in order to take the breakdown. Well, unfortunately, we didn't get the basing. As much as I was hoping that the basing would come into play, we did not get the basing. They gave us a very clean entry. We did, however, get a bounce off of our area of demand. And the demand area gave us a really nice run off of that level to the opposing zone, way the heck up here. So that was a really, really clean move. You see the gray box because this is where I needed the basing to be in order for this trade to make sense for an entry. Now, if you took the trade anyway, and you counted these wicks as enough basing to get you in, then you were rewarded for doing the wrong thing. And I think that that's dangerous. I'm still going to follow my rules very strictly. And even though the trade wound up working out, it's not one that I'm going to say, hey, look, that was a good trade. Look at what we made. Nope, nope. That trade did not make sense. It didn't follow all of our rules, even though it worked out. Sometimes you're going to follow the rules and you're going to get stopped out. And sometimes you're going to not follow the rules and the trade would have made you money. And the trade is going to make you money. I'd much rather follow the rules and lose money than break the rules and make money. Because over time, what that's going to do is breed consistency. This game is, the world of trading is not about hitting one home run and 42 strikeouts. It's about consistency over time, and that's all about the rules. Speaking of the rules, here's one that, following all of our rules, we took a clean stop out. The euro, we'd identified this little wick over wick level as a potential point of reversal. And when you're wrong, this is in my mind the way you want to be wrong. You want to be wrong very early in the trade. Price come into the level and then just popped right through that zone. And there's nothing wrong with that. Now it wound up going a bit higher, even higher than this pivot, and so putting not quite a tweezer top, but pretty close to a tweezer top. Overall, our euro position is still. Our euro trend is still very much to the downside. And so getting below yesterday's lows would be, another opportunity to short would be if we get basing right in here. There would be the opportunity for the clean drop. But as far as a reversal trade goes, there's not a whole lot above me in which I can lean on at this point. Canadian dollar. In the Canadian dollar, I've got a couple of levels above me that are actually a bit cleaner than I've got in some of the other markets. Most of which being this area right up here, as you'd look for a rally back up into this zone if indeed price comes back into that region. And then last but certainly not least on our bonds and currency markets, we've got the the New Zealand dollar, which is chopping sideways. Not a whole lot happening here worth talking about. We have potential breakdown below the 71.58, but we'd have to look up a bit higher to see if there's going to be a supply zone. You can maybe see something on a 15, but it's kind of mucky. Price action being this muddy tells me that I probably shouldn't be forcing it. Great British Pound, obviously, breakout does still exist above this region here, so we'll keep that area very much in play, very much in mind, and then the demand area is down below at this 35.63 area. That's actually off of a 15-minute chart, so I need to change the color of my line here. Remember, our purple lines are 15 minutes. Our green lines represent 1 hour, and that's relevant due to our 6 candle rule and the time frame in which we will look for basing before the level. Japanese yen below our support and below our area of supply, so kind of in between those two regions. And then the Australian dollar also a lot like the New Zealand dollar in between. So a lot of these currencies very much in between. The market's been very much sideways the last few days. If you guys have any questions on this, just feel free to shoot me an email, chuck.fulkerson@tradersarmy.com. If you guys need anything, let me know. I will talk to you soon. Have a great weekend. Stay safe. See ya.